Welcome back to Investing Talk Podcast. Today, we're looking into a company that's, well, certainly been making some waves and sometimes headlines in the satellite communications space, AST SpaceMobile. Our goal today really is to tackle a question that many of you might be asking. Is AST SpaceMobile a good time to buy right now? We've gone through the recent news, the financials, market sentiment, trying to piece together a clear picture for you. And hey, we always appreciate hearing from you, so please do hit that subscribe button, give us a like, leave a comment below. Also, if there's another company you want us to examine, just drop the name in the comments. We definitely look at those suggestions. Okay, so let's start with the basics. What is AST SpaceMobile actually trying to do? Because this isn't your typical telecom play. No, not at all. Their big claim, their flagship idea is creating a cell tower in space. Think about that, providing broadband directly to ordinary smartphones, the one in your pocket right now, using LEO satellites and actual mobile spectrum. Yeah. So global connectivity from space, no special satellite phone needed. It's ambitious.
It really is. And what's fascinating is the how. They've already set up agreements with mobile network operators globally, which is, a key part of the strategy. But, and this is a big but, this level of innovation, it comes with huge hurdles. It really is a classic high-risk, high-reward situation from the get-go.
Absolutely. And AST SpaceMobile has had, let's just say, an eventful few months. Let's maybe unpack some key things that happened recently, looking back, say, over the last quarter or so. What stands out? Well, back in July, after a pretty sharp run-up, the shares pulled back, found some technical support around $41. But what was interesting there was the institutional activity. We saw like $1.59 billion in inflows over the past year.
Yeah.
That significantly outpaced outflows.
Yeah, that suggests some big players were accumulating, maybe seeing long-term potential despite the dip.
Then came August. Big announcement, a $64.5 million deal to acquire S-band frequency rights.
Right. S-band, that's critical spectrum for mobile satellite services. A strategic move definitely strengthens their hand.
Yeah, and that deal's expected to close later in 2025. And remember, this was after the stock had, well, an incredible run earlier. After hitting lows in May, it gained something like 1,911%, before settling into a $20-32 range leading up to that announcement. Quite the ride.
A serious roller coaster. Shows the volatility inherent here.
But then, September, things got a bit rocky. The shares dropped nearly 14% pre-market one day. Why? Well, SpaceX announced its own massive $17 billion spectrum deal with EchoStar.
Exactly. Suddenly you have much stronger, very well-funded competition breathing down their neck. That changes the game.
And we also saw that weird spike in options volume around September 8th. What did that tell you?
Yeah, that huge volume spike. It usually points to heightened speculation, lots of bets being placed on big moves up or down. It really highlights those two forces pulling at the stock. Belief in the unique tech versus the fear of intense competition. A lot of that speculation is probably priced in right now.
Okay, so moving from market moves to the books, we have to talk financials. What's the foundation look like for AST SpaceMobile?
Right. And this is probably the most critical part for potential investors. How are they funded? Is there a path to actually making money? Currently, the revenue is minimal, and it's non-recurring. Think limited government contracts, some equipment sales. That's about it. They're operating at significant losses, which, makes sense. They're pre-commercial, investing heavily in R&D, building and launching satellites. The latest 10Q from March 31st, 2025, it just confirmed that trend. Negative net income, widening losses, expenses are huge.
Okay, so if they're not really bringing in money yet, when can we expect that to change? When does recurring revenue kick in?
Well, management's plan hinges on high-margin revenue from that direct-to-device connectivity. But initial commercial service isn't expected until after they deploy over 60 of their Block 2 satellites. Realistically, that puts it in late 2025, maybe into 2026.
So no real earnings forecasts out there yet?
Not really, no consensus anyway. It's just too early, still pre-revenue, not much analyst coverage yet.
And what about cash? How much do they have, and what's the debt situation? Are they burning through money?
Okay, cash. As of June 30th, 2025, their pro forma cash, so cash adjusted for recent financing, was about $939.4 million. Total debt sits at $278.6 million. That includes $235 million in convertible notes that aren't due until 2032.
They've been busy raising money, though, right?
Very busy. They raised nearly $489 million through an at-the-market program, selling shares over time. And they did a big $503 million equity deal, partly using that to buy back $225 million of those convertible notes.
But the spending continues.
Oh, yeah. Manufacturing satellites, capital expenditures, R&D, regulatory costs, it all adds up.
Yep.
They're using cash fast. We're talking potentially hundreds of millions over the next year or two.
Which means?
Which means significant potential for dilution, more capital raises, issuing warrants, things that increase the share count and could reduce the value for existing shareholders. Future funding needs are almost a certainty.
Okay, let's talk about the battlefield. This direct-to-device space, it's new, but it's heating up fast. Who are the main competitors? And what's AST, SpaceMobile's edge, their moat?
Yeah, it's definitely getting crowded. You've got SpaceX's Starlink Direct-to-Cell, which is obviously a huge name. Link Global is another player, plus other existing satellite companies. AST SpaceMobile's main claim, their potential edge, is that promise of true direct-to-ordinary smartphones broadband. Using LEO-sats and real mobile spectrum backed by those MNO deals globally, that's their unique selling proposition, theoretically. No special phone needed.
But how strong is that moat, really?
Well, the barriers to entry are high. You need massive capital, advanced tech, regulatory approvals. It's not easy. But the execution risk for ASTS is equally massive. Can they actually build, launch, and operate this complex global system reliably and cost-effectively? And is that first-mover advantage really there when you have giants like SpaceX moving fast? The scale they need is just enormous. It's a huge question mark.
Looking ahead then, what are the key things investors should be watching for? What catalysts could, move the needle in the next 3 to 12 months? Both planned stuff and maybe market rumors. Okay, short term. We've got ETF rebalancing coming up September 16th. That can shift institutional holdings. Then Q3 earnings on October 21st. Everyone will be watching losses, sure, but also any updates on the commercial rollout timeline. That's key. There's a holiday report on November 4th, an institutional buys update November 12th, and then Q4 guidance and maybe a commercial launch milestone update on December 2nd.
Right. And beyond those dates, we're looking for more satellite launches, Block 1, Block 2, probably late 2025. Plus, finalizing that big Ligato and Marsat spectrum deal, the $550 million one, and as we mentioned, probably more financing news.
And longer term, what are the really big picture drivers?
Long term, it's all about actually launching the service, getting that global recurring revenue stream going with those 60-plus mobile carriers, likely 2026 or later. That means scaling the satellite fleet from just a few test ones to over 60 operational satellites. Huge undertaking. And navigating all the critical regulatory hurdles in different countries, that's crucial.
Okay, what about the less official stuff? The market chatter, the speculation.
Ah, yes. Well, there are always rumors swirling around stocks like this. Some chatter suggests maybe an accelerated commercial launch, trying to beat competitors. There's also ongoing speculation about a potential strategic partnership, maybe with a major U.S. telecom. That would be huge validation.
Interesting. Anything else?
Yeah, some whispers about big institutions maybe buying in ahead of that ETF rebalancing could drive short-term price action. And maybe some optimism, or rumors at least, about faster progress on getting global regulatory approvals for more spectrum in Q4. If any of these rumors actually pan out, you could definitely see some significant stock volatility, but they're just rumors for now.
Let's look at the charts then. Technical analysis. What's the price action telling us? And what's the general market feel?
Okay, technically, the last 3 months have seen it bounce between roughly $2.30 and $3.80. So quite volatile. Support seems pretty solid around that $2.20 to $2.40 level. We've tested that a few times. Resistance is up around $3.60 to $4, where it peaked after some positive news recently.
What about moving averages? Trend?
Yeah, the 50-day moving average is sloping down, and the 200-day is still way above the current price. That confirms it's still in a long-term downtrend, unfortunately. And the RSI, the Relative Strength Index, it's kind of oscillating between 35 and 55. No strong momentum either way. Not deeply oversold, not strongly overbought, just choppy.
And volatility?
High. Very high. Big price swings are common, especially around news like financing or launch updates. The average true range confirms this. It moves a lot day to day compared to other stocks.
And sentiment. How are investors actually feeling based on recent news and, online buzz?
Well, key news recently was that big financing announcement planning to sell more shares and issue up to $500 million in convertible notes, mostly to fund the build-out and refinance debt. We also had the Q2 update and the announcement of that potential $550 million Ligato and Marsat spectrum deal, though that depends on approvals and financing. Interestingly, it's still pretty undercovered by major Wall Street analysts, likely because it's pre-revenue.
Any insider buying?
Not really seeing large insider purchases. We have seen warrant issuances, though, like those 4.7 million penny warrants tied to a spectrum deal. That points back to the potential for future dilution if they use shares to pay for obligations. Something to watch.
The general feeling.
Online, especially among tech and space-focused traders. Highly speculative, lots of excitement, lots of debate. But more fundamental, long-term investors, they seem pretty skeptical still, mostly because of the dilution risk and the complete lack of revenue so far.
Okay, this brings us to the really crucial part, the risks. With all this potential, what are the major red flags investors absolutely need to consider?
This is critical. And the company's own filings, the 10K, spell some of this out. There's a going concern warning.
Explain that. What does going concern actually mean here?
It means the auditors have substantial doubt about the company's ability to continue operating for the next year without raising more money or successfully launching its service. It fundamentally highlights that the business model isn't viable yet on its own. It needs repeated external financing. And that ties directly back to that huge dilution risk we keep mentioning. More shares issued means your piece of the pie gets smaller.
Okay, so financing and dilution are major risks. What else?
Big project execution risks. What if satellite launches get delayed? What if there are technical failures in orbit? What if they can't get regulatory approvals? What if they default on a spectrum payment? Any one of those could seriously derail the whole plan.
Customer concentration, too.
Well, yeah, because revenue isn't diversified at all right now. It relies on future agreements panning out. And then you have the broader sector risks. The satellite and space industry is just inherently volatile. It's capital intensive, takes a long time to build things. Plus, macro risks, higher interest rates, hurt these kinds of long-duration, high-risk growth stocks. And ongoing regulatory fights over spectrum are always a possibility.
So let's try to pull this all together. What's the bottom line? What's the investment thesis for AST SpaceMobile right now?
Looking at everything, our analysis suggests AST SpaceMobile is still very much a high-risk, high-reward play, almost like a lottery ticket. You get exposure to this incredibly ambitious idea, the cell tower in space, but it's pre-revenue, burning cash fast, and faces just enormous challenges in deployment, financing, and execution.
And the constant fundraising.
Creates heavy dilution risk and just an overhang on the stock. Investors know more shares are likely coming. Until that satellite network is actually up, running, generating real revenue, and the regulatory hurdles are cleared. The upside is purely speculative. It's tied to hitting milestones, not actual earnings.
And the chart doesn't look great either.
No, the technical picture shows no clear sign of a turnaround yet, still in that long-term downtrend. And in this kind of market environment, high cash burn moonshots tend to get punished. So overall, we've rated it a 3 out of 10 for now.
A 3 out of 10. Okay, so what does that mean practically for someone thinking about different time horizons?
Well, for short-term trading, maybe, but only if you're a highly speculative trader, comfortable with extreme volatility, and specifically targeting catalysts like a launch announcement. The outcomes can be binary, big win or big loss.
Yeah.
For long-term investment as part of a core portfolio, no, not suitable right now in our view. Not until we see recurring revenue, clear progress on execution, and those dilution risks are better managed.
So back to our original question. Is AST SpaceMobile a good time to buy now? Based on everything we've discussed, the sources suggest it's clearly a highly speculative investment at this stage, really only suited for investors with a very high tolerance for risk, maybe focusing on those short-term catalysts rather than seeing it as a foundational long-term holding. You know, this whole discussion about AST SpaceMobile's huge ambitions and equally huge risks, it really makes you think, doesn't it? What level of risk are you personally willing to take for innovation that could, quite literally, be interstellar in its impact? Just a reminder, everything we've talked about today is for research and educational purposes. It is definitely not investment advice. Thanks so much for joining us on Investing Talk Podcast. We look forward to our next discussion.